Hello and welcome back to the ROI channel, the channel that's obsessed with all things to do with the art and science of return on investment. Another stock review today. We're talking about a stock that holds a very important place in the Crassus investment portfolio, and that is of course Micron Technologies. If you haven't checked out the portfolio, click in the link below. You'll see a link where you can go to eToro and review how the portfolio is doing, and you can add us to a watch list, or if you're ready to invest and you like the style of investing that I do, you can copy the portfolio with, I think the minimum is $200. Thank you to everyone that's liked and subscribed on the YouTube channel. If you haven't done so, I would greatly appreciate you doing that now. That allows me, I guess, more incentive to put the videos out here on YouTube. So if you get value out of the analysis and want to see me keep doing it, please hit the like and subscribe button. And without further ado, let's get into it. Quick recap on the investment formula through which each and every asset in the portfolio must be run through and passed. And what we're looking for are companies with low debt, margin of safety, sales growth, strong margins, free cash flow growth, most importantly, and ideally a company with a history of share buybacks that is doing the right thing and treating the shareholders as the owners they are in creating value for them. So a quick facts with Micron just keeps beating analyst estimates. Okay, so I think for the last 4 reportings in a row, it's beaten whatever the estimates are, which means that analysts haven't really got a clue when it comes to putting a decent projection for the company's production. And we're in a very interesting space at the moment when it comes to semiconductors and CPUs and all the things that go into computers and electronics, which is cars, which is devices, laptops, things like that. So go and watch the video I've got on Intel to see more about the semiconductors. When it comes to Micron specifically, they're involved with DRAM. Okay, now I'm not a tech expert by any means, but I believe that is to do with the memory processing chips or memory processing capacity of electronic devices. And so we're seeing a huge supply constraint with COVID and various other things. And so the prices of things like semiconductors and basically anything that goes into electronics is expected to rise significantly. And so for those companies in those industries, they've got a secular tailwinds or secular bull market ahead of them, and companies such as Micron, I believe, are very well positioned to take advantage of that. So revenue is expected to come in around 32 billion, EBITDA just shy of 13 billion. They've got that's a 10-year track record, compounded annual growth for each of those. As you can see, sales are growing and margins are growing just nicely. Market cap 83 billion, enterprise value just less than that slightly, which means they've got negative net debt or more cash on the balance sheet than their liabilities. Price as of recording is $73.81. Shares on issue, 1.1 bill, and 25 million was spent in buybacks last year. Now they could have spent more, but given the state of the industry, their cash flow has been put in towards a large amount of capex because they want to be able to ramp up their production. So with the heightening demand for the items that they manufacture and produce, obviously they want to be getting as many of them out the door as they possibly can while the going is good. So most of their cash will be not given out as buybacks, not giving out as dividends, although they do pay a very small dividend, but look for the investment in capex to pay off down the track. Return on capital, 10%. That's pretty good for a cyclical business. And as I said, negative net debt to EBITDA. Let's take a look at the price action. And you can see we've gone all the way up to just shy of $96 over the year to date. And for some reason, sentiment around Micron is a bit on the nose at the moment, and I don't really think that matches up with the fundamentals. So we're almost getting in at the year low there. You see, I think it's put in a bottom, and we're getting in at certainly fundamental analysis. I'm no good at technical analysis, but if you just look at the last year, that seems to suggest that we're getting in at a reasonably good time. If we like the company, we think it stacks up to the fundamentals, which, as you'll see in a moment, I do believe to be the case. So as you sort of follow the cursor there, we've got a couple of competitors. We've got Advanced Macro Devices and Intel. The company also competes with Samsung. And you can see that those companies have done extremely well, up 15.4% for Intel on the year, AMD up just shy of 22%, and yet Micron's actually dipped back 4% over the same time horizon. So interesting, that seems to be the value play would be with Micron, all other things, of course, being equal. Now, a few quick facts that I've literally just a cut and paste in here because I don't want to go... I don't want to be spending too much time doing these, but that DRAM, or that dynamic random access memory, is 73% of Micron's revenue, so almost 3/4. And another part, which is the flash memory, is 24% of the revenue. So we need to keep an eye on that because they have quite a concentrated revenue. But fortunately for Micron, the demand and market for those products is expected to be quite high over the next at least 3 years, if not longer. Here's what I was talking about before. So Micron an adjusted $1.88 a share on sales in the last quarter, ending June. And analysts were expecting a long way short of that. On a year-over-year basis, Micron's earnings have jumped up 129%. 129%. Okay, so they are smashing estimates, and sales are 36% up on last year, which is incredible. Currently, with Micron at least is forecasting $2.30 a share over the quarter. So we're looking at about $9.20 in earnings on a sale of 8.2 million. Who knows? I guess the company would be a little bit conservative, and so Wall Street here is saying they were expecting earnings of slightly less than $2.20 for the quarter. So we'll see how it turns out, obviously, but I would not be surprised to see them smash past both of those targets. So I guess we're going to find out. And here's what we're saying, in terms of qualitative aspects for the industry as a whole, these chip supplies are going to be remaining tight well into 22, and a lot of people think even past that to 2023, 2024. And obviously that'll allow Micron to raise prices right at the time where they should have an increased capacity. So all things are looking positive for the company in that respect. Short-term estimates at the end of 22, the free cash flows, the EBITDA, and the earnings are expected to come in as follows. And what you'll notice about Micron is that in basically all of its multiples, its valuation metrics, it's at about 50% of the industry median or even less. So what other investors are willing to pay for other companies, Micron is 50% or more below those. So free cash flow multiple for the industry median is actually 21. I rounded it down to 20, but Micron is at I believe 9.8. Which is, I mean, way too cheap, I believe, in terms of a relative valuation. Same deal with enterprise value to EBITDA and the price to earnings ratios. I mean, it's the median is basically double from where Micron is currently trading. So these numbers look really good, and they are. But just take into account that is allowing for quite a bit of multiple expansion. Okay. However, when the reason that I've put the multiples as they are is because it's not, in my opinion, unreasonable to expect a quality company such as Micron that's ticking all the boxes and looks like it's got a bright future, at least in the near term, to revert to the industry median in terms of its valuation. Okay, in terms of what the multiples investors are willing to pay for the cash flows. I mean, why wouldn't they start to be bid up? That's the way I look at things, and so even if we weren't to get quite to those extremes, they're not extremes. As I said, they're the median in terms of the multiples for valuation on the cash flows and the earnings. You still, I believe, it's still worth the risk to reward in that sense. So if you average each of those implied prices, we're looking at $211 coming in about 18 months' time, which is nearly a triple. Okay, 285% on the upside. This is not some speculating mining company that we're living a pipe dream and expecting a moonshot. This is a really big producer of a much in-demand product whose supply has been severely constrained over the last year or two. Okay, so if we take the cash flows here that Micron is expected to produce at its historic growth rate of those cash flows, buying it at today's price and exiting at the industry median, discounted at the company's weighted average cost of capital, we're looking at an IRR of 15.31%. And if we do the same process but using the EBITDA on a per share metric and then exiting at the industry median enterprise value to EBITDA, again discounting it back at the weighted average cost of capital, our IRR is very, very healthy, 36.67% expected, which is phenomenal. I mean, that'll be beating the market by a long, long way. Average of the two, about 25% IRR. Okay, so that should really give us confidence. We're here, okay, and we've got what I always do, we just come up with three scenarios: a base case, a bull case, and a bear case. The base case, I use historic metrics in terms of growth, multiples, etc. And I always use a discount rate of our required rate, which is 20%. And then the same applies, only I'm a little more exuberant on the bull case and give it a haircut on the bear case, a little bit more conservative. And then I run a probability weighting down the bottom here, which you'll see. So I've applied 60% probability that Micron continues on its growth at the same rate that it has over the last 10 years. 20% bull case, 20% for the bear case. And I've done the same thing in this scenario. This is looking at the EBITDA, and if we did the free cash flows, that's what the intrinsic value would be. And if we did the earnings as a model, that's the suggested intrinsic value of the company. So if you equally weight them and average them, you're looking at an intrinsic value of $199.78. And that's suggesting that in order to get our 20% required return over time, we would need to buy the shares at $199 or lower. Okay. Our margin of safety, our extra margin of safety is in place. Meaning we've done all this work, we believe that the intrinsic value is around about this in order to get our 20% return. Can we buy the shares at 2/3 of that value, okay, or even less, giving us that extra margin of safety? And so that would, using these models at least, suggest an intrinsic value margin of safety of $131.85. And so it's, as far as I'm concerned, it's a no-brainer in terms of purchasing the stock at $73 odd. The verdict then, unsurprisingly for me, is a buy. I bought these shares as part of the Crassus Investment Funds. It currently makes up around 5% of assets under management, and I think that it's a solid company. It's got no debt, a margin of safety in terms of the industry, so qualitatively, a relative margin of safety in that it's trading a lot lower multiples than its peers. It's got a margin of safety in terms of a high discount to its what I believe its intrinsic value is. It's got strong margins history, free cash flow growth that they've used for CapEx to increase their production, which should increase cash flows and pay back more in the future. And then once that CapEx is done, they then can start to buy back more shares. They bought back a few, but they've chosen to focus more on the reinvestment side of things, which I like. Or they can buy out another company and use their infrastructure, or they could simply dividend the increased free cash back to investors. Okay, so I think things are really bright for Micron in terms of the base case. And look, if we just get the multiples of the valuation multiples to revert to industry median, we are going to make a hell of a lot of money over the next year or so. So very excited about the prospects for the industry and Micron in particular. Thanks very much for watching. If you haven't liked and subscribed, please do so and leave a comment if you like the analyses. If you like the way that I invest, by all means, click on the link in the description. Download the eToro app, and then you'll see the portfolio there. You'll be able to see how it's doing. And if you've got a couple of spare dollars, just press the copy button and you'll be able to benefit from the hard work that I do and receive a good rate of return over time, hopefully. No guarantees, of course. Disclaimer, I'm not a financial advisor, thank God, and you need to do your own due diligence. Don't just believe what you hear on the internet. You need to go through, read and learn about companies that you're interested in, or any types of investments for that matter. You can't rely on anything that I say or anything that someone else does. This is just I'm just a guy that loves investing and happens to run an investment fund on eToro. So I'm going to leave it there, wishing you all the best in your investing, and I hope to see you again in the future with another video.